Welcome back. It's still Business Morning on Channels Television, and we're coming to you live from Lagos, Nigeria. Well, today on the program, as I said earlier, our focus is going to be on the manufacturing sector. We'll be looking at how much manufacturing sector has contributed to the country's GDP for at least the fourth quarter of 2013 and the first quarter of this year. I'll be having this conversation with the Managing Director and CEO of Coleman Wires and Cables, Mr. George Onafowokan. Good morning, Mr. Onafowokan. Thank you for coming in.
Good morning, Harriet. Thanks for having me.
Let's talk about latest developments in your industry. I seem to remember we had this conversation not too long ago, maybe like the last 6 months or thereabout. And I remember asking you that in the short to medium term, how do you expect the industry to be like? And you gave me a positive answer. So has it actually been as positive as you talked about?
I think the figures actually tell itself. 4% to a 6%, 6.77% was expected, but 6.21 was actually achieved. I think that itself tells it all. If we have moved from last 2 quarters of last year or 2013 GDP figures, and we're looking at the figures for 2014, and between that 2013 and now, we've seen a 2 basis point rise in GDP figures. That shows that on the actual figures for manufacturing and the real sector, we've seen a massive improvement. And 30%, it's a lot. And I think that is buttressing the fact that we were very positive because of what we've been seeing. I think it's germinating from what has been happening over the last 3 to 4 or 5 years. And we're now seeing the benefit of it. It's coming out upstream a lot better than we were expecting. To me, I don't think 6.2 is a disappointing figure. We didn't eat the actual figure of 6.7, but 6.2, I think it's a very good achievement on the part of growth on the manufacturing sector.
So, you know, the Renaissance Capital actually says manufacturing sector contributed as much as 1/3 of the total GDP for the first quarter. And they feel that that was a sector that's the major driver of the economy, not even the telecoms or the oil and gas sector or even agriculture that we've been talking about.
Because we would have to be, manufacturing has to be the driving force, because the manufacturing sector comprises not only of what we normally term manufacturing, in terms of everybody thinks manufacturing, we'll all be talking cement and maybe major industries. Now, but you're talking food and food beverage industry contribute massively to that industry. You're talking the real sector itself in overall, from food to now you're looking at automobile, now you're looking at currently the more areas coming out apart from the food and beverage. But I think the food and beverage, unfortunately, accounts for majority of these figures. But that industry would grow. And it's a bit more positive because it's why I say it's positive for us that Nigeria is actually growing in that area, because these are the same industries that were leaving Nigeria for Ghana. Now we're saying actually those figures growing massively on the food and beverage industry. So we're moving away from people running away from Nigeria to go to other countries to manufacture this product and send it to Nigeria, to people actually wanting to manufacture it within the country and grow and expand their current structures to actually cope with the expanded demand that I think still envisage will still grow further even in 2014, last 2 quarters.
So before we get to the reasons why most companies that used to run away from Nigeria to neighboring Ghana, for instance, are coming back, let's talk about the numbers. We have good numbers.
Yeah.
But a lot of people would say we're not seeing anything. We say manufacturing is growing, but we still have a high rate of unemployment. We still have expensive products in the market, particularly food items as well. So it's almost like we're just talking numbers. We're not seeing value.
It is for Nigeria, I think it's now almost an acceptable norm for us to be more expensive. Now, the reason we're more expensive, is not in terms of that the products cannot be cheaper, but the infrastructural costs are higher. So your overhead cost is higher for any manufacturer. So by the time you build that into the cost of processes, it automatically makes the actual product more expensive. Now, but unfortunately, or fortunately for us, I'll say, as a country, we've compensated. Now, why I say compensated? Because if you compare Nigeria to a lot of other countries, we're actually quite expensive country to live in. But we still find a way of living within it. So why I say we're compensating, if you look at the average earning of a Nigerian in the last 5 to 10 years, it has actually gone up tremendously, even in the manufacturing sector.
Some will argue.
You can argue that. Now, but you cannot compare a GDP figures or a per capita income of $600 to $2,800 thereabout today. So something has grown. So we're earning more. Now, when you start earning more, your buying ability and capacity increases. Now, which I think is one of also the driving force for this manufacturing, especially in the food and beverage. The more I know you can buy more soft drinks, more food, more eateries, the more that industry will continue to expand to cope for more people being able to afford to buy it. Now, and that I think is what we're seeing. Now, Nigeria, we are expensive. We have unemployment that is actually on the high side. But I think if the system continues or policies continue to drive growth in other areas, not only manufacturing will indirectly continue to grow to meet up to the expectations of those growth that are happening in the other areas. So if service sectors continue to increase, yes, telecom is not growing as much as it was in the last 2 to 3 years. Yes, but other sectors might still be growing. But manufacturing would have to grow faster than anybody to try and meet up to this demand that is going to be created. And we have the population.